Welcome back. It's earnings season, so let's get a corporate conversation going and understand how the quarter gone by was, and more importantly, what's the outlook ahead for Crompton Consumer. The company, I'll quickly run through the performance, came out with a revenue decline of about 16%. Margins actually held up pretty well. Margins actually improved to about 31.6%, to 13.6%, and the gross margin, that is, was slightly higher at 31.6% versus 31%. So some improvement on the operational side of things. Let's get the conversation going now with the management. Shantanu Khosla, MD of Crompton Consumer, is with us. Mr. Khosla, good morning. Thank you for joining in. Now, I just want to understand first and foremost that, did you deal with only 15 days of disruption in the third quarter? Because things are okay till about the 15th of March. And more importantly, to what extent have you been able to restart your business now?
Yes, things were going very well till the lockdown. In fact, if you look at just January and February, our business has grown in aggregate 14% over a year ago, which was on track for one of our best quarters. Obviously, come the second half of March, everything just locked down and stopped. And also, this being our year end, the impact on top line was significant. But importantly, as you mentioned in your opening, given our excellent cost control and cost saving programs, in spite of the impact of the lost volume, which we estimate to be almost around 300 crores in March, we held and in fact slightly grew our margins. As we've gone through this period, really we've had three focus areas through the stages of the lockdown. First, most important, continues to be our number one priority is the health and safety of our employees, but not just our employees, but also our partners in the trade and our vendor partners. The second has been cash and cost. Our balance sheet is strong. In fact, we end the year with a cash on hand balance of almost 600 crores, but nonetheless, we have really focused on maintaining cash and also driving cost reductions. Third, which is the stage we're now getting into, is once the lockdown begins to ease, how do we ensure a vertical startup? Now, since the beginning of May, markets have gradually been opening. And in fact, we estimate that probably about 40% or so of retail stores have opened, and we begun to effectively service them. The demand is gradually picking up in these stores which are open, and we anticipate that maybe demand currently in these stores is about 70% of normal, but we are seeing as the lockdown eases the trend in the right direction. Also, of course, now we have all our factories operating. They are obviously operating across the country with limited manpower, limited capacity, good health hygiene, social distancing norms, etc., and our people are safe. We have about 55, 60 of our 80 critical vendors also operating across the country, and apart from one, all our warehouses are open. So things are gradually beginning to move. The key is, of course, having the markets open. The underlying demand was very strong for our brands and products up till January, and we believe that that strength will help us as the markets and stores keep opening for the demand coming back. Assuming things continue to improve and the plans and the programs to help bring COVID under control work, we do anticipate that somewhere around the second quarter things will start coming back pretty much to normal. But obviously that's a big unknown because it already depends on the health situation.
Do you expect a sort of pushback as far as demand is concerned, or do you think demand will come back very strongly? I mean, what indications do we have? Because people are comparing what may happen here to what's happening in China. But I mean, tough to say if that is the right comparison to use, but your sense?
Well, our sense is really with, of course, the caveats of some things are just have to unfold as they unfold. But, our products and our categories tend to really not be discretionary. Things like fans, lights, When you need them, right? Even during earlier, though they were much less severe, obviously, disruptions such as demonetization or the GST implementation, we saw demand come back in terms of consumption within a couple of months. The early signs are that the demand should gradually come back over a few months, but really we will have to see how it goes over the next couple of quarters. But we are optimistic right now.
Our inventory levels, I mean, how are inventory levels right now?
Inventory levels in the trade are fine. And we're seeing that as a reflection of as stores open, our primary shipments are going into them quite well. See, what we got to realize is when the lockdown happened in March, we were obviously producing and creating inventory in our entire supply chain to build up to that season. So the inventory never really went into the trade. It was with us as a company or in our warehouses. That is the inventory which is now moving out into stores as they open. And it's also helping us because it means that we can gradually ramp up production, taking into account all the social norms. So we don't need to be producing right now at 100% capacity for this current month or maybe the next also. So the inventory is okay, not too high in trade, beginning to move out from company-held inventory into the retail customers.
Okay. Mr. Khosla, you said you are sitting on about 630 crores of cash, if I got that number right?
Around 600. I think the exact number is 585 crores cash on hand and cash equivalents.
Okay.
You know, so
okay, would love to chat with you a little more on the working capital cycle, how the vendors are doing. Sure, sir, unfortunately we're completely out of time and we're running into a commercial break. So we hope to get you back to discuss some of those issues as well in the next couple of weeks. Thanks very much for joining in. We need to take a very quick break. Back with more in just a moment.